Politics and economics are jikumane. US stocks and FX are jikumane.
Okay, let's unpack this. Today we're taking a deep dive into, well, the pretty fascinating world of digital infrastructure. We're focusing specifically on a company called Applied Digital. You might know it as APLD. And you've shared just a stack of sources with us, market analysis, press releases, even some reports looking ahead at the whole data center industry.
Yeah, and what's really fascinating here is how Applied Digital is, well, it's positioning itself right smack in the middle of this AI revolution. So we'll try and connect the dots, between their strategic moves, these huge shifts happening in AI and data centers, and what it all means for companies, for innovators like you listening. Our mission really is to pull out the key nuggets, the most important bits of knowledge, so you can walk away feeling, well, pretty well informed about this whole sector.
Yeah.
It's moving so fast.
Right, it really is. And here's where it gets really interesting for me. Applied Digital, APLD, they weren't always focused on AI, were they? Let's maybe start with their journey. They initially went public back in April 2022, and they were called Applied Blockchain then.
That's right. Serving the blockchain and Bitcoin mining industry. Very different space.
Totally different. But then came this pivotal shift. I mean, you could call it a strategic masterstroke, really. November 2022, they changed the name to Applied Digital. And that signals this big pivot towards high-performance computing, HPC, right, for AI, for cloud customers.
Mm-hmm. And they even set up a subsidiary, Psi Computing, that was May 2023, specifically for these AI and cloud data centers.
So why the shift? I mean, it seems obvious now, but it connects directly to that just surging demand for AI infrastructure, doesn't it? And that's how APLD is kind of carving out its niche.
Exactly. And if we, connect this to the bigger picture, think about traditional data centers, the ones run by, say, Equinix or Digital Realty. Many of those just weren't originally designed for the kind of intense demands AI puts on them.
Yeah.
Which brings up a good question. Why does AI need such specialized infrastructure?
Yeah, what's so different?
Well, it really comes down to what some people call the greenfield advantage. APLD, they build these next-generation data centers totally from scratch, specifically designed for AI workloads, HPC, GPU-intensive stuff.
Okay, so not just sticking more servers in an old warehouse.
Right. Contrast that with the legacy players who are often trying to retrofit older facilities. And that's just, well, it's costly and it's slow. It's like trying to put a Formula One engine in a family car.
Okay, got it.
And the biggest challenge, technically, it's cooling. AI computing gear, especially things like NVIDIA's H100, B100, even the new GB200 chips, they generate just massive heat loads.
How massive are we talking?
We're talking like 30 to 100 kilowatts or even more per rack. Traditional data centers might be designed for maybe 10, 15 kilowatts per rack.
Yeah, that's a huge difference.
It's enormous. So you need specialized cooling. APLD's Ellendale campus, for instance, it's designed with liquid cooling, high-density airflow. It makes it one of the few places in the U.S., really, that can efficiently host these huge multi-megawatt GPU clusters. And that efficiency actually helps tenants, reduce their power consumption, too.
That's fascinating. It's not just about scale. It's a fundamentally different kind of building. So, okay, let's unpack the big wins then. What's put Applied Digital on the map? I guess we have to start with the CoreWeave deal, right? The behemoth.
Oh, absolutely. That's the headline grabber.
They signed these approximately 15-year lease agreements with CoreWeave, the AI hyperscaler, for 250 megawatts M2W of IT load at their North Dakota site, with an option to expand that up to 400 milliW total.
15 years. That's almost unheard of in this space.
Right. And the expected revenue, something like $7 billion, approximately, just from that one deal.
It's a massive vote of confidence. And you have to understand CoreWeave's significance here. They're a key partner for NVIDIA. They essentially provide access to those cutting-edge NVIDIA chips for companies that can't build their own giant AI data centers.
So this deal really validates APLD's position then?
Absolutely. It shows they're becoming kind of a foundational piece of the whole AI ecosystem. Now, it's important to note, while the deal is huge, the full financial impact, that won't really hit the books until fiscal year 2025. You'll see minimal, maybe zero impact on the Q4 FY25 earnings reported recently. These things take time to build out.
Right, makes sense. Big projects. And beyond the deals, they've been securing power and capital too.
Yes, and this is often overlooked, I think. That Ellendale site, it already has access secured for 1 gigawatt of power.
1 gigawatt, that sounds like a lot.
It is. That's a major feat. Getting that kind of power commitment from the grid is incredibly difficult and valuable. The market sometimes undervalues that piece.
And funding for the build-out.
They've lined that up too. $150 million in convertible preferred equity, another $375 million in financing with SMBC, all earmarked for that Ellendale HPC campus. They're laying the groundwork.
And laying the groundwork for even more, it seems. That leads us right into their expansion strategy, which sounds pretty aggressive. Just recently, August 18th, 2025, they announced they're breaking ground next month, September 2025, on a $3 billion campus. Polaris Forge 2.
That's the one. In Harwood, North Dakota, another huge project.
Yeah, the initial phase alone is specified at 280 megawatts, and they're aiming for initial operations in 2026, full operation by early 2027.
Their CEO, Wes Cummins, basically said this project is a significant step to propel Applied Digital to an AI infrastructure leader. Pretty clear vision.
What really strikes me, though, is the NVIDIA connection. It's not just CoreWeave. NVIDIA itself holds a stake, right? Like 1.79%.
Yes, they do. And they recognize APLD as a preferred cloud partner.
What does that signal? NVIDIA putting their own money in and giving them that preferred status?
It signals huge industry confidence. I mean, NVIDIA is the kingmaker here, right? They don't just partner with anyone. They need partners who can actually handle the power and cooling demands of their latest GPUs and who can scale. So their stake, that partnership, it's more than just money, it's strategic alignment.
A validation from the source, essentially.
Exactly. It tells you NVIDIA sees APLD as a crucial piece for getting their chips deployed effectively. Makes APLD feel pretty indispensable in that chain.
Okay, so you have these massive builds, these huge partnerships, this validation. What does it all mean for the wider industry and APLD's place in it? I mean, the demand picture is just staggering.
It really is. Look at McKinsey's projection. They're saying U.S. data center power demand could double from maybe 3 or 4% of total U.S. demand now to potentially 11 or 12% by 2030.
11 or 12%, that's enormous. That's not just building data centers. That implies whole new power infrastructure challenges.
Absolutely. It raises huge questions about the grid, about sustainable energy. It's becoming non-negotiable for growth.
And we're seeing the spending already. Alphabet, Meta. They're planning to spend over $150 billion just on AI infrastructure by 2025 alone.
Right. And this huge demand, this power crunch, it raises that important question again. How are companies adapting their AI infrastructure?
What are the trends there?
Well, one big shift we're seeing, expected to grow in 2025, is this move towards model to the data. More private AI infrastructure, more hybrid deployments.
Okay, model to the data. What does that mean practically?
It means instead of sending all your potentially sensitive company data out to some massive public cloud for AI processing, you bring the AI model, the intelligence, closer to where your data actually lives, on your own private servers, or even right at the edge of your network.
Ah, okay. So keeping the data local, what are the benefits there?
Several big ones. Privacy, obviously, especially for sensitive data. Speed to lower latency is crucial for things like real-time voice or image AI services, and potentially lower operational costs in the long run, especially for mature AI services that transfer a lot of data back and forth.
That makes sense. And you mentioned the edge. Edge computing seems increasingly relevant.
Hugely relevant. You need robust IT infrastructure right out at the edge for lots of reasons now. Data sovereignty is one. Think about data localization laws in places like China or Indonesia. But also IoT, generative AI applications needing quick responses, other real-time stuff. Gartner actually predicts that 70% of large enterprises will have a documented edge strategy by the end of 2026.
70%, wow.
Yeah, but this massive scaling of infrastructure, whether it's central or edge, it also magnifies other challenges. Cybersecurity is a big one.
Right, more infrastructure, more attack surface.
Exactly. These data centers are prime targets. We're seeing cyber threats escalating globally. Look at APAC, forecasted $36 billion in cybersecurity spending just for 2024. And there's this emerging threat from quantum computing. You hear about harvest now, decrypt later attacks.
I've heard the term. Explain that a bit.
It means attackers are stealing encrypted data today, stuff they can't break with current computers. But they're banking on future quantum computers being powerful enough to decrypt it all years down the road. It's like a ticking time bomb for secrets encrypted today.
That's unsettling.
It is, and it highlights the need for quantum-resistant encryption for using AI itself in cybersecurity tools.
And the other big challenge, sustainability, I assume. All that power use.
Absolutely. Building green data centers isn't just good PR anymore, it's becoming a business imperative. The market for sustainable data center solutions is exploding, projected to go from around $715 billion in 2018 to nearly $4 trillion by 2026.
$4 trillion.
Yeah, and this ties back to Applied Digital's own commitment, or stated commitment at least, to sustainable growth. It has to be part of the strategy now.
Okay, that's a really helpful overview of the broader landscape.
Yeah.
Before we dive into APLD's specific financials, was there one thing about their strategy looking back that really surprised you or stood out?
Good question. I think for me, it was their foresight, maybe luck, maybe genius, in securing that 1 gigawatt of power access at Ellendale so early, before the market fully woke up to just how severe the power constraints for AI were going to become. That was a really strategic move. Locking that in gives them a huge advantage now.
Yeah, securing the power bottleneck first. Smart. Okay, let's talk numbers then. Financials, analysts. What did the picture look like for APLD? As of mid-August 2025, we've got 9 analysts covering them, rating APLD a strong buy on average. The average 12-month price target is around $17.22, which suggests, well, only about 5.4% potential upside from where it was then.
But the target has moved up significantly.
Exactly. It was way lower, like $9.50 back in May 2025. So analysts have become much more bullish recently.
Okay. What about recent performance? They reported earnings not long ago.
Right, end of July 2025. Fiscal Q4 and full year 2025 results. Wall Street was expecting an EPS, earnings per share, of negative 13 cents, and revenue around $43 million. Now, their actual Q3 revenue the quarter before that was $52.9 million. That was a solid 22% increase year over year.
But wasn't there a slight dip in one area?
Yes, good point.
Yeah.
Data center hosting revenue, their kind of core legacy service, was actually down 7% quarter over quarter in Q3.
So overall growth, but maybe a shift within that growth.
Yeah, it could suggest, maybe they're focusing resources so heavily on ramping up these big new AI projects that some older revenue lines are taking a temporary backseat. It's a common trade-off in hypergrowth.
Makes sense. What are we looking forward? Projections.
The projections, especially for fiscal year 2024, are where things get really dramatic. Revenue projected somewhere between $385 million and $405 million.
Wow. Compared to what in FY23?
Compared to $55 million in FY23. So that's like a 600% increase, give or take. Massive jump.
And profitability.
Yeah.
Or adjusted EBITDA.
Adjusted EBITDA also projected to leap from basically negligible $146,000 in FY23 to somewhere between $195 and $200 million in FY24.
Okay, so the growth story is definitely compelling based on those forecasts.
Yeah.
But growth often comes with risks and costs. What about their financial structure? Debt.
Yeah, this is where it gets a little complex. We found some conflicting information in the sources, actually.
Oh.
Well, one source really highlighted a potentially concerning picture at the end of FY23. A high debt-to-capital ratio of 3.3x mentioned rapidly depleting cash and pointed out they weren't expected to turn a profit this year. You mentioned the negative PER earlier.
Right, 3.3x debt-to-capital can sound high. What did the other source say?
Another source looked at the debt-to-equity ratio, which was 2.19, and it characterized that as being below the industry average and actually favorable.
Huh. So different metrics, different perspectives on the same underlying leverage. That 2.19 DE might indeed be okay or even good in a super capital-intensive industry, like building data centers from scratch. Depends on the comparison group.
Exactly. It suggests you need to look deeper than just one ratio, but it does flag that leverage is something to watch. What other risks stand out?
Well, the obvious short-term ones. Stock price volatility, you mentioned that 7% drop, then a 19% surge around earnings. That's pretty wild. Then there's the sheer funding needed for that $3 billion Polaris Forge 2 project. That's a huge capital raise.
Construction risks, too, I imagine. Delays, cost overruns.
Definitely. And just the time lag. It takes time for these massive projects to actually start generating significant revenue and contributing to that bottom line we talked about.
And wasn't there a past legal issue?
Yeah, there was a historical class action lawsuit mentioned. That's often a flag investors watch, even if it's resolved.
But they do have a strategy to mitigate some of this risk, right? The staged build.
Yes, and that's crucial. Their strategy is generally to only bring new capacity fully online once they have secured demand for it, either build to order or based on what they call high conviction contracts. This helps minimize the risk of building huge, expensive facilities that then sit empty, burning cash. It de-risks the expansion quite a bit.
So that staged approach sounds smart for managing capital, but does it have a downside? Could it make them too slow? Like, if a huge wave of unexpected demand hits, can they react fast enough if they're waiting for contracts?
That's the trade-off, isn't it? Yeah, it probably means they might miss out on some smaller, quicker, more opportunistic deals that pop up. They might not have speculative capacity just sitting ready. But given the sheer scale of deals like CoreWeave or the plans for Polaris Forge 2, their focus really seems to be on landing those massive long-term anchor tenants. That aligns with being a foundational provider, even if it means less flexibility for sudden, smaller spikes.
Okay, that makes sense. Focusing on the whales. So, wrapping up here, we've taken a pretty deep dive into Applied Digital, their ambitious plans, powering the AI revolution, these purpose-built data centers, massive deals, future expansions.
Yeah, it's really clear, I think, that their strategic foresight, anticipating AI's unique demands early on, combined with building this specialized infrastructure, it definitely positions them right at the forefront. But it's a rapidly evolving industry, and they're navigating both huge opportunities and some significant financial hurdles and risks.
Absolutely. So for you, the learner listening in, the key takeaway here really seems to be that interplay, right? Between the cutting edge tech infrastructure, the power, the cooling, and the market dynamics driving it all. It's not just about building more data centers. It's about building the right kind for the future of AI, keeping an eye on those strategic partnerships, the power access, and yes, managing the financial side of hypergrowth.
Which brings us to a final thought, maybe a question to ponder. As AI just keeps evolving, pushing compute boundaries, demanding ever more power and processing, what kind of innovative solutions are going to be needed next, beyond what APLD is doing now, to support this, frankly, insatiable demand? And maybe what other overlooked industries like blockchain hosting was for APLD might suddenly become pivotal for the next phase of this whole technological leap.